Hello there. Welcome to video 121 from Sumit Academy. I do hope that you have subscribed to my channel. Do subscribe now so that you do not miss out on my previous or future videos. And do remember to like and share this video. And if you want to get in touch, I shall always be available at sumitacademy20@gmail.com. To ease your way to navigate my YouTube channel, here is a quick look at all the videos available on my channel, listed under the playlists in which they are categorized. Have a look. In this video, we shall talk about expenditure budget. The Union Budget is the blueprint of the government's revenue and expenditure for a fiscal year starting from 1st April of one year to 31st March of the following year. It is presented during the month of February so that it can be finalized before the start of a new financial year. According to Article 112 of the Constitution, it is an extensive financial statement that presents the government's estimation of revenue sources and estimated expenses for the year. It is classified into two parts: the revenue budget and the capital budget. Revenue budget contains the government's revenue receipts and expenditure, while the capital budget comprises of the government's capital receipts and payments. The term expenditure budget refers to the estimated expenditure of the government during a given fiscal year. It highlights the allotment of funds for disbursement to different ministries, sectors, departments in a financial year as a part of the union budget. These allotments are made under plan and non-plan estimates for departments and ministries concerned. The government prepares the expenditure portfolio in three different documents. Now, what are these? Let's have a look. The first is expenditure profile. Now, the expenditure profile compiles relevant data across all ministries and departments to sketch a profile of the general financial performance of the government. It is one of the explanatory documents that aid economic analysis. The statements contained in this document are prepared on the basis of data given by the ministries themselves. Some of the statements are based on the data contained in the expenditure budget. It includes budgetary trends on gender budget, the welfare of women and children, resource allocation for the northeastern states, and welfare of the scheduled castes and scheduled tribes. Second, demand for grants. It is the document in which estimates of expenditure from the Consolidated Fund of India are submitted in pursuance of Article 113 of the Constitution. They are included in the annual financial statement and are required to be voted upon in the Lok Sabha. The demands for grants include both charged and voted expenditure. These are further classified as revenue and capital expenditure according to the nature of end use, that is the use on which it will ultimately be put to. Third, expenditure budget. The expenditure budget contains details and estimates of the amount to be allocated to different ministries and departments for their proper functioning in a given financial year. The expenditure budget can be broadly categorized as revenue expenditure and capital expenditure. Now let's see what these terms mean. Revenue expenditure refers to the expenditure which neither creates any asset nor causes reduction in any liability of the government. It means it is recurring in nature as it is incurred on the normal functioning of the government and the provisions of various services. These include payment of salaries, pensions, interests, expenditure on administration, defense services, health services, grants to state, and so on. Important thing, remember, this expenditure does not create an asset of the government. For example, payment of salaries or pension is revenue expenditure as it does not create any asset. However, the amount spent on construction of metro rail, as for example, is not revenue expenditure. Why? Because it leads to creation of an asset. The expenditure does not cause decrease in any liability. For example, repayment of borrowings is not revenue expenditure because that will lead to reduction in liability of the government. Now, it must be noted that union grants to states are treated as revenue expenditure, even though some of the grants may be used for creation of assets. Right. So basically for the central government, it is revenue expenditure, whereas the state governments may use it for creating assets if they so desire. Now we come to capital expenditure. This refers to the expenditure which can either create an asset or causes a reduction in the liabilities of the government. Now, it is non-recurring in nature and adds to capital stock of the economy, increasing its productivity through expenditure on long period development programs. Right. So let's see an example of this now. Example will be loan to states and union territories would be expenditure on building roads, flyovers, factories, purchase of machinery, etc., and of course, repayment of government borrowings. Important fact to remember is that the expenditure must create an asset for the government. For example, construction of metro rail is a capital expenditure as it leads to creation of an asset. However, any amount paid as salaries is not a capital expenditure as there is no increase in the assets. That becomes a revenue expenditure. Second, the capital expenditure must cause a decrease in liabilities. For example, repayment of borrowings is a capital expenditure as it leads to a reduction in the liabilities of the government. Let's summarize this. Expenditure budget provides complete information about the total expenditure of the Union government in a financial year. This exhaustive information is classified into two broad categories as per the end use: capital expenditure and revenue expenditure. I hope this is clear so far. While capital expenditure results in the creation of a physical asset or investment, revenue expenditure comprises mainly operational expenses such as payment of wages, pensions, subsidies, and interests. Further, the expenditure budget is in two parts: charged expenditure and voted expenditure. Now, these are two new terms we are now going to study. Charged expenditure, like payment of interest on the money borrowed by the Government of India, is considered the liability of the government. Therefore, it is not required to be put to vote in the Lok Sabha. Voted expenditure, on the other hand, comprises those revenue and capital expenditures that are required to be approved by the Lok Sabha by way of voting. Usually, the government prepares its expenditure related information in three separate documents: expenditure profile, expenditure budget, and demand for grants. These are presented under the expenditure budget. Now, expenditure profile compiles information from all the ministries and departments to draw a complete picture of the financial performance of the Union government. This document is self-explanatory and helps in economic analysis. Expenditure profile contains budgetary trends on important policy issues such as gender budget, welfare of women and children, resource allocation for the northeastern states, and welfare of the scheduled caste and scheduled tribes. It also contains consolidated information about government schemes such as central sector schemes and centrally sponsored schemes, subsidies, investment in PSUs, and resources of PSUs. After the merger of Railways budget with the Union budget in 2017-18, the information in the expenditure profile also contains a detailed analysis of the Ministry of Railways. Be sure to state in your examination answer that expenditure budget contains all government expenditure in a financial year, ministry as well as department wise. The expenditure of every ministry gets divided into two parts as per the nature of end use, that is the final use on which it will be put to, namely capital expenditure and revenue expenditure. The information about both capital and revenue expenditure is further given in two separate categories as charged expenditure and voted expenditure, as per the requirement of voting in the Lok Sabha. So charged expenditure is not voted upon, whereas voted expenditure obviously is self-explanatory. Revenue expenditure pertains to expenditure that does not result in the creation of any asset for the government and does not result in the reduction of any liability. In the case of capital expenditure, the expenditure of the government either results in the creation of some assets and results in some kind of investment that will yield profit or dividend in the future. Let's also have a look at the demand for grants and budget expenditure of government. Article 113 of the Constitution stipulates that any proposal or estimate seeking withdrawal of money from the Consolidated Fund of India has to be presented before the Lok Sabha in the form of demand for grants. Therefore, every ministry and its departments work together to prepare demand for grants for the expenditure set to be incurred during the next financial year. These demands are collectively presented in the Lok Sabha as part of the Union Budget. They also include any recoveries to be made from the expenditure to be incurred. The demands for grants include both charged and voted expenditure. These are further classified as revenue and capital expenditures as per the nature of end use. Well, that's all from me in this video. This video is based on the information freely available on the internet. No originality is claimed for the same. The intention of this video is only to prepare candidates for answering examination questions on the subject. Do like and share this video and do subscribe to my channel now so that you do not miss out on my previous or future videos. And if you want to get in touch, I shall always be available at sumitacademy20@gmail.com. Till later then, cheerio.